Let's talk more about those self-employment retirement accounts. So SEP IRAs, simple IRAs, and solo 401ks are three popular retirement savings options for self-employed individuals and small business owners. They each offer different features and benefits, making them suitable for different situations. Now, for self-employed individuals and small business owners, contributions made to these accounts will reduce their taxable income by lowering their AGI. It's not like they work for a big accounting firm who just takes care of all this for them. They gotta kind of jump into that themselves. This is beneficial because a lower AGI can result in a lower taxable tax bracket, increasing eligibility for certain tax credits and reduced exposure to certain taxes that will actually be based on AGI thresholds. Also, you're just paying less taxes, which is great to see as well. Self-employment tax. This is a tax on net self-employment income, which is calculated as the sum of Social Security and Medicare taxes. Self-employed individuals are responsible for paying both the employer and employee portions of these taxes, since they're not paying into these programs through a traditional employer-employee relationship. So on your W-2, whenever you get your paycheck, right, you see, oh, well, I have these Social Security and Medicare taxes. Yes, you pay that, but also your employer pays that. So while you might think, oh, I need a salary, I need a increase, I need some extra wages, that is an extra cost. There's also costs to hire an employee. I'm not trying to say you shouldn't get a raise or anything, but just something to keep in mind. Just because, let's say, your employer pays you $60,000 a year, they're paying a lot more than just $60,000 a year to hire you. I'm in favor of getting a raise for everyone, but just keep in mind that's how this works. Whatever you pay out of yours, they're paying as well, your employer. But if you're self-employed, you have to pay both portions, which that's not fun. The Social Security tax rate for self-employment income is 12.4% on net self-employment income up to a changing amount. And the Medicare tax rate is 2.9% on all net self-employment income. In addition, higher income earners may also be subject to an additional Medicare tax of 0.9% on net self-employment income above certain thresholds. Any of these thresholds and amounts will be included as well for you to memorize. The purpose of the self-employment tax is to ensure that self-employed individuals contribute to the Social Security and Medicare programs in a manner similar to traditional employees. Social Security provides retirement, disability, and survivor benefits to eligible individuals, while Medicare provides health coverage for those over 65 and those with certain disabilities. Got a lesson on the federal programs and regulations and all that. We'll see that there, but not too important for you to know. Stuff like this, a lot more important. Tax, oh, you know it, absolutely critically important. Given a little context here, self-employment tax is therefore an important source of funding for these programs. By requiring self-employed individuals to pay into these programs, the government's able to maintain the financial stability of the Social Security and Medicare systems. I don't know if they will be. Maybe that'll still be around by the time we retire. Maybe not. A lot of people saying it won't be. The rationale for the self-employment tax is that self-employed individuals, like traditional employees, are benefiting from the government's provision of Social Security and Medicare benefits. Therefore, it's reasonable to expect self-employed individuals to contribute to the funding of these programs in a similar manner as employees do through payroll taxes. That's in theory, right? That's in theory. Hopefully it all works out in the end, but that's just the rationale from the IRS's perspective. All right, example here for self-employment tax. Let's say that a self-employed individual earns $100,000 in net self-employment income in year 3. Self-employment tax is a tax on net self-employment income, which is calculated as the sum of Social Security and Medicare taxes. The Social Security tax rate is 12.4% on net self-employment income up to a threshold, which, again, anytime we have a threshold, it'll be available for you to memorize. And the Medicare tax rate is 2.9% on all net self-employment income. For year 3, the Social Security tax applies to net self-employment income up to $142,800. Therefore, the maximum amount of Social Security tax that an individual would pay in year 3, it's actually capped at this amount. This amount we see, that is the total amount. So the total amount is 12.4% on the 142, which is $17,707.20. 20 cents is very important, so make sure you don't forget that part. The Medicare tax rate for self-employment income is 2.9%, and there's no income cap on this tax. So you're just going to pay this, and pay this forever and ever and ever, no matter how much money you're making. To calculate the self-employment tax for this individual, we would first calculate the Social Security tax and Medicare tax separately. So for the Social Security tax, what's the total portion here? The Social Security tax applies to net self-employment income up to $142,800, which again, just the number we're using for this example in particular. In this case, the individual's net self-employment income is $100,000, which is below the cap. So the Social Security tax on this individual's net self-employment income would be $100,000 times 12.4 for a total of $12,400. For Medicare tax, though, the Medicare tax rate is 2.9% on all net self employment income without any income cap. So the Medicare tax on this individual's net self employment income would be $100,000 times 2.9, which is $2,900. Therefore, the total self employment tax owed by this individual would be the sum of the Social Security tax and the Medicare tax, which we get from those two examples above, for a total of $15,300. In this case, the individual would owe $15,300 in self employment tax for year 3. What a lucky individual. Got to owe that money, get it to the government. All right, self employment tax and health insurance. Self employment tax and self employed health insurance premiums have specific implications for individual income tax returns. Both of these items can be claimed as above the line deductions, meaning that they are subtracted from the taxpayer's gross income to arrive at their AGI. These deductions can be taken regardless of whether the taxpayer chooses to itemize or take the standard deduction. First off, for our 50% self employment tax, self employed individuals are required to pay self employment tax, which covers Social Security and Medicare taxes. Unlike employees, self employed individuals must pay both the employee and employer portions of these taxes, as we've seen. However, they can deduct half of the self employment tax, which is the employer portion, as an above the line deduction. You're like, this is ridiculous. Why do we even bother to calculate it if they can deduct half to begin with? That's the government for you. So we have to calculate it, include it, and then we deduct it. It's lunacy. I know. This deduction helps to reduce the taxpayer's AGI and consequently their taxable income. The self-employment tax deduction is going to be reported on 1040 Schedule 1. Again, it's just helpful to see those, especially the Schedule 1, Schedule A, and some of the more common ones, seeing where those items go. It'll help it visualize it more, where those items go as you're doing questions, and kind of just like writing them in there if you print out the tax forms. Next up, self-employed health insurance. Self-employed individuals who pay for their health insurance premiums, as well as those for their spouse and dependents, can claim an above-the-line deduction for these expenses. This deduction helps to lower the taxpayer's AGI and taxable income, potentially reducing their overall tax liability. To claim the self-employed health insurance deduction, the taxpayer must have a net profit from self-employment, which is reported on Schedule C, essentially, or Schedule F if you're a farm, or Schedule CEZ in other instances, but really more so Schedule C for our purposes for the exam here, and cannot be eligible for employer-subsidized health insurance through their employer's spouse. The self-employed health insurance deduction is also reported on that Schedule 1. So again, this would be a great opportunity to take a look at Schedule 1, see where all of these items go. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.